Our mission at SD Bullion is clear: the lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping, 4% credit card fees, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 15,000 new customers who have recently made the switch to SD Bullion. Why pay more?
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, Eric, we had another BLBS report today. Supposedly 215,000 jobs gained in March. And we'll get into that in a minute here. Immediate result was a smash down in gold and silver. Silver down 4% on its lows, all the way down back to a 14 handle. I think 1479 was the low tick we saw today. Gold down also from right around the 1235 level to about 1210 was the low. We're recording this about 2 p.m. Eastern time, and both gold and silver have retraced about half of their losses. Gold's trading back above 1220 right now, and silver is actually trading back above 15, trading about 1510 right now here in the early afternoon on Friday. So let's start with the jobs report, Eric, and your take on it and the resulting smash in the metals.
This is probably one of the more obnoxious jobs reports that they've published in quite some time, and it's building on their performance of the last couple of months. It wasn't all that long ago, a couple of weeks back, Obama was berating people in the media, saying that if anybody were to speak of economic statistics in a disparaging way, they're just conspiracy theorists. Well, you look at what the BLS publishes, and even today, we have complete reversals, and the market is getting to the point where even an increasing percentage of managed money from the conventional world, as I've been arguing for the last 6 months plus, is beginning to come to the understanding that the central bankers don't have the market participants back, and that this whole effort to paint an economic picture counter to what's really going on is getting really crazy. I'm going to include in the write-up for the show some amazingly wonderful work by the folks over at Alhambra Investment Partners. The speed at which they crank out the statistical anomalies that come forth from the BLS is something to behold. These guys are doing great work. One of the things that they pointed out is that in the last couple of years, we've seen this trend pretty consistently, where the sales in retail sector correspond pretty well with all employees being generated and new jobs for the retail sector. But if you look at the last year or so, and I'll include a chart in the write-up, the ease of which anyone can see the discrepancy going on it's so amazing that it stands out as clearly as day. And I think that given the degree to which the powers that be have been manipulating economic statistics aggressively in the last 18 months, it's beginning to wear on the market participants. I can't prove that. It's just a general sense. We're sitting here recording today, Friday. Unemployment reports typically are huge smash-down days, and that certainly didn't disappoint in the early part of today. But the dollar has completely reversed and is now down 3 cents at the dollar DXY index at 94.62 cents as I speak. And silver and gold have taken maybe 2/3 retracement of the crash down, give or take, and they're stalling out a little bit, but that's actually a pretty decent performance given that this is a non-farm payrolls report Friday and all of the anticipation of the smackdown that the precious metals community has been expecting, given the consistent and persistent very high open interest and short interest among the commercial traders on the COMEX and the picture that the COT report is painting. We talked a lot about that over the last couple of weeks, and in particular I wrote a lot about it in the show write-up for last Friday, making the argument that given the nature of the background kind of sentiment that's shifting in the precious metal space, with really big Western investors beginning to nibble. I think we're truly seeing the unfolding of the third phase of the precious metals bull market, and I've been making that argument for all year. And today is the kind of day that you look at and you see this kind of reversal pattern, and it fits as but one more data point. Maybe not necessarily speaking to the fact that a cartel is not going to be able to get prices down next week, and that momentum doesn't have some more downside potential. But the reality is that these markets are trading very differently. And we're going to have Bill Murphy on next Tuesday because Doc's going to be taking a vacation, so we're going to shift the schedule around a little bit on our show, and that's going to be a great show. I want to throw that out there in advance for people, since it is going to be on a Tuesday, to check it out when we get it up either Tuesday or Wednesday. Because Bill's been talking a lot about the different nature of which this market has been trading, and I think he's spot on. It's fascinating to watch. I think we're truly in the third phase of the precious metals bull market. It's a rebooting of the precious metals bull market after 4 years of hell.
To substantiate that, just from what we're seeing today in SD Bullion, Eric, we're seeing insane demand for silver today. It had been a little bit quiet on Wednesday and Thursday, but I mean, 4% smash down 60 cents is nothing new for silver if you look back over the last 5 to 10 years. But the response today has been completely overwhelming. I mean, we're recording at 2 p.m. here, and SD Bullion's already burned through over 30,000 silver rounds today. Over 30,000 rounds. And I mean, we're not an AppMax. We're not the biggest bullion dealer in the country by any means. So the demand to a 4% takedown here has been insane, overwhelming, whatever you want to call it. It's been very strong.
Yeah. And reflecting on what might be in the back of the mind of the policymakers, masters of the universe, trying to keep all of these plates spinning. I think the dollar is actually part of the Rosetta Stone in trying to understand what the heck they're doing. Because, it was a couple of days ago that Janet Yellen was doing a rather unusually dovish presentation, and the whole management of perspective economics setting of a sentiment for support of the dollar was chipped away, given her jawboning. And then what do we see? We see this kind of flip back and forth that kind of takes the time frame of every 2 weeks or so, give or take. I mean, it's not exact, of course, but you do see this kind of flipping back and forth between support and efforts to underpin sentiment from an economic point of view. But then when the dollar gets too strong, I believe that the powers that be, the economic masters of the universe, are a little bit afraid of the translation mechanisms that a strong dollar can impart on dollar-denominated debt held by countries around the world, particularly third world countries, and how that translates as well in terms of the currency war, and in particular how it relates to what China does. And then when you add on top of that, in the last couple of weeks, we've had the ECB come out with their proof positive that Draghi is trying to at least prove that he has a bazooka. Whether or not it shoots much is another question altogether. I mean, basically, the reaction to the world markets has been kind of a big yawn. I mean, we haven't seen a rollover in stocks, and the equity market in terms of general equities has been rather supported overall. But it just looks like there's a lot of underlying churn, and that this is like the kind of stress in markets that happen when you get to inflection points. And I think the dollar is actually speaking a lot to what is going on in the minds of the policymakers. And if people follow what's going on with the dollar, you might get some insight into what, in fact, may be coming on, the jawboning agenda of the Federal Reserve policymakers and their media appearances and whatnot.
Listeners, a quick update on the physical markets here in the U.S. For gold and silver. We had been, up until today, demand had been softening over the past week or two, and a lot of things that have been unavailable for months are starting to become available. A lot of the wholesalers are either have some of the 10-ounce RCM bars or are getting them in within a couple of weeks. And I mean, it's been probably since last June that any wholesaler has had stocks of the 10-ounce RCM bars. A lot of the Sunshine products have come back online just in the last couple of weeks. Pretty much all of the Sunshine rounds and bars are now available. And again, that's probably been last June since the full lineup of Sunshine silver products have been available. And we've been seeing a softening in the 90% premiums, both wholesale and retail. They've come down probably about 50 cents over the last couple of weeks. But again, things can change in a day or two, as we saw last summer. And today's demand has more than made up for probably the whole week. With the amount of physical silver that's being sold through both at the wholesale market and the retail market here today and Friday.
Are you seeing any changes? I mean, I would imagine premiums are not going to respond quite this quickly, but do you see anything coming in terms of the supply chain with premiums being shifted from your suppliers?
No, not yet. So it doesn't look to me that we've had any big movements in premiums. I mean, maybe a few things about a nickel, but no big signs that the APs are looking at a big shortage and they're feel like they can move prices around wherever they feel like because nobody can get metal. So that's good news for retail buyers. I mean, it's never a good thing for really the retail dealers or for the retail investors when supply is so tight that really supply and demand spike the premiums higher. It's better for investors when prices at recent lows or near recent lows, and then there's enough supply that you can pick up some ounces without paying half the price of silver and the premium.
And have you seen any change in terms of distribution for single large buyers coming in and representing a bigger percentage of your order flow recently, or any kind of shifts in terms of the stacker community stepping up to the plate or going dormant?
Sure. Yeah. Over the past week or two, there's been I would have told you there's been a disproportionate amount of new large buyers than the average stacker who just every week puts away $500 or $100 or $1,000 that they've saved. Today, it's been everybody. It's been new big buyers. It's been people who've bought before that are coming up and ordering $100,000. It's been people that are making weekly purchases. Just everybody's buying today and Friday.
Yeah. I recall the interview you did with Rory earlier in the week, and I'm kind of curious. Do you see any time where platinum purchases have picked up at all? I mean, I know you guys don't do a lot of platinum sales, but I was just kind of curious if that is hitting your radar as well, too, given the lagging that platinum has done vis-a-vis gold over the
platinum
2016 period.
Platinum, really the only big pickups we see in platinum is when the Canadian Mint or the U.S. Mint ever decide to release coins. So there's a spike in demand when the Canadian Mint released the 2016 Platinum Maple. Same thing with the Austrian Mint and the Philharmonics. And it's been a couple of years now since the U.S. Mints produced Platinum Eagles. So, I mean, the retail market for investment products in platinum is so small that it's really almost driven more by product releases than it is by the market.
Very interesting.
Taking a look here at the U.S. Mint's numbers, we're up just shy of 15 million ounces. My prediction earlier in the week or last week was we'd be at 14.8 million with the Mint shutting down last Friday, and looks like they somehow worked for an hour or something on Friday. They're at 14.8425 million ounces here at the close as of the close of March. So just shy of 15 million ounces for the first 3 months of 2016. It's by far record-setting pace. If they can keep that up, they'll eclipse the previous mark by about 15%. I don't think it's probably likely they'll hit that number, but I do think somewhere around 50 million is definitely possible here in 2016 for the Silver Eagle production and sales. All right, so looking at the market here, hopefully gold and silver continue to claw back some of their gains here. The rest of the access market here this afternoon, Eric, what are you looking for as the market opens Sunday night and into next week?
Well, unfortunately, it's really hard to say. I mean, sometimes I can get a pretty decent read on short-term trading trends and be reasonably accurate. And frankly, I am not able to tell with a great deal of accuracy what's going to happen, Sunday through mid next week. But beyond that, I am firmly of the view, given the kind of confirmation trading that we see today and throughout, pretty much, certainly since February 1st, the kind of trading that, or actually even to some extent, even mid 2/3 of the way through January, we had that huge smackdown, and the cartel came in and they particularly attacked mining shares very aggressively. And I think that was kind of a stealth capitulation move, and ever since then, and I know a lot of people decry my use of describing it that way because it's not a traditional capitulation, of course, but it was an inflection point nonetheless. And then we saw another inflection point back in February 11th, and earlier or last show I was talking about how they were trying to basically erase all of the gains that were racked up since that February 11th spike, and they're just not getting anywhere. The market is confounding all efforts to manipulate and manage prices downward, and I think that we have now finally come back into a mode where we're watching a managed retreat process. It's and to help people understand what that means, and then 2000 to 2008, midway through, basically July of 2008 is when the commodity sector peaked. And then later that year, we had the 2008 capitulation spike down crash with the financial markets crash. And then by 2011, we saw, QE2 coming out, and eventually the U.S. Debt Treasury bonds were downgraded to AA versus AAA. And we've had that kind of shift in the powers that be basically freaking out. The system was under complete attack, and then the 2008 crash changed the way in which the masters of the universe have to deal with the smoke alarm, or the barometer, as Greenspan referred to gold, and by extension silver, because silver can in fact be the Achilles heel to the cartel's efforts to keep precious metals down. And we have seen this period since 2011 all the way through the end of last year of just unbelievably aggressive cartel attacks, and they were able to keep the precious metals down in large part because Western paper buyers, and in turn even the more smart money, longer term physical buyers and the buyers of mining shares basically were absent without leave, because they understood that the trend was not in their favor, that to quote unquote fight the Fed would be a losing proposition, and on and on. And I think that we are now seeing that entire psychology shift. And the short-term targeting of price forecasts sometimes is doable, sometimes it's not. I don't think it's very clear what the heck's going to happen going into Sunday and Monday, but I think we'll probably see very quickly actually, in the next 2 weeks, moving higher. And people are going to be surprised by that, because we're still, generally speaking, I think the balance of sentiment in the sector is one where, in the precious metals sector, is one where people are expecting lower prices because of this high commercial short position and ongoing manipulation and whatnot. But, we'll see. Ultimately, I suspect that the powers that be will, in fact, be able to get the dollar to move up a little bit more, because they got it down low enough initially in the last 2 weeks to be able to, do the song and dance about the economy doing better and letting the dollar move up as a result, and tolerating that until what it would be maybe U.S. dollar DXY index of 98 or 97. And all the while, precious metals will probably at worst be getting a headwind, but that's not going to stop the precious metals market. So for April, I'm very bullish. And I think that Indian demand coming back online after their strike is going to be a very significant positive. We've seen precious metals perform stupendously well in 2016, and within the last, I forget how long the strike's been going on, but it's been more than 20 days. That put a pretty significant damper on ongoing purchases for the jewelry industry within India, and the holiday season buying is not that far off. It'll come, and they'll be boosting the inventory channels and creating yet another underpinning for the fundamentals of gold. And so, this is an amazing bull market in the making, in my opinion, and we're going to see a lot of people very surprised about how strong the precious metals are going to be in the near term. Sunday, I can't tell. Monday, I can't tell. But within the next 2 weeks, I think precious metals are going a lot higher.
All right. This sounds good, Eric. We'll look forward to a good, strong April then, hopefully. I think we'll wrap this week's show there. So thanks for tuning in. For the Doc and Eric Dubin, thanks for tuning in to this week's SD Weekly Metals and Markets.